Thank you for staying with us. You are back with me, Hema Subramanian. Foreign funds offloaded 1.1 billion ringgit worth of local stocks from Bursa Malaysia last week, making it the 17th week out of the last 18 that foreign investors had been net sellers, according to MIDF research. Foreign selling was still in aggressive mode last week. It was the second week this year that the net sale amount exceeded 1 billion ringgit. In a report, Zulkifli, head of research, acknowledged that foreign funds continued to sell Asian stocks aggressively last week, as the foreign investors offloaded an aggregate of $4.36 billion, which is equivalent to 14.6 billion ringgit of stocks in 7 Asian markets, namely Korea, Taiwan, Thailand, Malaysia, Indonesia, Philippines and India. Well, moving on, some updates and discussion for this week on Capital Today.
Malaysia's total trade is forecast to grow in 2014. Figures from the Department of Statistics reveal that on Friday, Malaysia's exports grew more than expected in December. Exports grew 14.4% in December from last year, when economists expected that it would grow 10%. Now, this was the 6th consecutive growth in exports since July 2013. Likewise, imports rose 14.8% annually, faster than the expected 8.2% increase. Consequently, the trade surplus totaled to 9.47 billion ringgit compared to expectations of 9.56 billion ringgit.
Now, with this recovery, Malaysia's exports for the full year 2013 advanced 2.4% to 719.81 billion ringgit. At the same time, higher manufacturing activities, as well as capital formation through growing investments, accompanied by higher domestic consumption, caused imports to rise 7% to 649.19 billion ringgit. The department added that despite imports outpacing exports, Malaysia is still enjoying a positive trade balance.
To our next story, RHB Research Institute expects Malaysia's GDP to expand at a faster rate of 5.4% this year on a sustained growth in consumer spending.
Well, the good news is the research house said in a note yesterday that last year's GDP growth was projected at 4.7%.
But domestic demand was seen to remain resilient and act as a main engine of growth for the economy in 2014.
I hope that gave you some interesting insights. Construction conglomerates Gamuda and IGM Corporation will get most million paid by taxpayers after Putrajaya agreed to hold toll rates for 2014. While motorists using 14 highways around the Klang Valley cheered Deputy Prime Minister Tan Sri Muhyiddin Yassin's announcement, the reality is that all taxpayers will bear the brunt of the controversial compensation that comes at the start of an austerity drive. CIMB Research said in a research note that the 400 million ringgit due in 2014 will be the highest in 7 years and would bring Putrajaya's cumulative compensation to 1.5 billion ringgit since 2008. Let's continue to the discussion on Capital Today.
String of economic data to be released this week may excite the local market, which saw lackluster trading last week.
Yesterday, the government announced the Industrial Production Index, or the IPI, which saw a 4.8% jump in December 2013 compared with the same month a year ago.
And today, the government will present the country's 2013 GDP report card. Let's have a look at this story to find out more.
Malaysia's economy grew above expectations of Economist Outlook as it increased 5.1% in the fourth quarter ended December 31st, 2013. This was supported by stronger manufacturing and service sectors.
Be that as it may, on a year-on-year basis, the economy grew at a slower pace when compared to the 6.5% growth recorded a year earlier. By comparison, 2012 was seen as a stronger year for the nation due to the stronger manufacturing output. Let's take a quick look on the report with regards to the Malaysian economy growth.
Hope you enjoyed some of the segments of Capital Today for this week. Money can't buy love, but certainly it does contribute to get attention from loved ones, and it is vital to show effort. We will be back after a short break. Stay tuned.